Our next guest says investors can't take the recent gains for granted. He's pretty bearish, very bearish on U.S. stocks as well as the dollar. Peter Schiff is president of Euro-Pacific Capital, and he's joining us here in our studio. And Peter, I want to start with dollar weakness because it's been such a focus of trading the past few weeks. Is that really your theme in terms of why you're so negative on the markets these days? Is it about the dollar?
Well, I think everything is about the dollar. I mean, whenever you're making an investment in the United States, people forget what investments really are. They actually represent quantities of dollars. People look, you talk about the Dow being at a record. Well, what does that record mean? I mean, it's a quantity of dollars. So you have to be very cognizant of what the dollar will buy, because the reason people invest is because they want purchasing power. And when you're investing in U.S. dollar-denominated assets, your purchasing power is a function of the strength of the dollar.
A lot of people would say, well, clearly the administration has no issue with real dollar weakness, even though the official policy line is dollar strength. I mean, certainly the weak dollar can be a boon to multinationals that are based in the U.S. So who's it helping?
Well, I've often drawn the comparison. A student can say, I have a straight A policy, but then they can spend all their time partying and going out at night. They're not going to get A's. But A's are a good goal, but you have to do the right thing. A strong currency is like an A, but I mean, we run budget deficits, we don't save, we don't manufacture, so you're not going to have a strong currency when you have that kind of economy. You're going to have a weak currency.
So let's talk specifics then. What kind of declines are you looking for? Are you focused on the S&P? Are you focused on the Dow? And what do you think would lead those declines? What's most at risk?
Well, I think the dollar, once it breaks below some of the key long-term support, if you look at a chart of the dollar index and say that support's around 80, I think once we break through that level and we're really in uncharted territory, I think there could be a wave of selling in the dollar that can drop it by another 10 or 15% very quickly and maybe cut its value in half over the next 2 or 3 years. And so if that's going to happen, even if the Dow Jones were to double in price to 25,000, all you do is be breaking even for your loss of purchasing power in the dollar. So if you have that kind of dollar weakness ahead, it's important that people invest abroad, not in the United States. And I also think with
let me ask you, because I get a sense you're probably using those numbers to be to illustrate your point. What kind of real declines are you anticipating?
No, that's what I'm looking for. I mean, I think that it could be a lot worse if we end up with a hyperinflation scenario. I hope that that's not the course that we go down. But what the Federal Reserve is going to have to do to limit the dollar's decline to only 20 or 30% or more is to dramatically raise interest rates, despite the fact that we're going to be in a recession. And even though raising interest rates makes the recession worse, they're going to have to do it anyway.
So before we talk about investing overseas, what about the Treasury market? Because you look at the bond market and you say, well, clearly the bond market has been pricing in that economic slowdown. Are you buying Treasuries?
No, not at all. I mean, I think the only thing worse than dollars today are dollars in the future, and that's what Treasuries are. They're promises to pay dollars. So I don't know what's holding up the bond market. It really should be dropping. Yes, there is going to be a recession, but during that recession, there's going to be a lot of inflation, and interest rates are going to go up. So if the bond market thinks we're going to get low interest rates because of a recession, the bond market is wrong. And anybody who owns bonds should take advantage of this and sell. But it's not enough to sell your bonds and just go into a money market. That's still not enough. You want to sell your dollars, and you want to own euros, you want to own yen, you want to own Australian dollars, pound sterling. You want to own anything but the dollar.
So your best investment idea then is non-U.S. currencies. It's a currency play?
Well, it's a currency play, plus, you get better valuations abroad. So if you want to buy stocks, why buy them in the United States when they're denominated in dollars? You can buy them in other currencies, and you can get them for lower multiples. You can get better dividend yields. And, we're heading into a very severe recession. I think the rest of the world is actually going to benefit from dollar weakness because it's going to be a transfer of purchasing power from American consumers to foreign consumers. So as Americans stop consuming, the rest of the world will really increase their consumption.
So you're focused overseas, but how fully invested are you?
Oh, I'm 100%. Yeah, and I also have a pretty good weighting towards natural resources and raw materials, precious metals, gold and silver, and industrial metals, and also other commodities that I think are still early in their bull markets. But to the extent that somebody wants to be very conservative, we have a lot of clients who are conservative, and we buy them utilities, we buy them property trusts, we buy them corporate bonds, except we buy them outside the United States in other currencies, not the dollar. Because if you really want to be conservative, you don't conserve very much if your investments are in dollars.
All right, Peter, thanks so much.
Well, thanks for
having me.
Nice having
on. Interesting perspective. Peter Schiff is president of Euro-Pacific Capital.